Welcome everyone back to another video, and today I'm going to be going over my simple four-step process for the ICT silver bullet model. And of course, ICT, he gets all the credit. Simply here, I'm just sharing my view, my personal style in the model with some slight tweaks here and there. And really this is to help a lot of traders that are not finding success in the model and are really lacking some sort of foundation. And I'm hoping that, by the end of this video, you'll be able to really engage price a lot easier and really focus on being disciplined, because at the end of the day, it's finding a model where, number one, you're going to be the most probable, and you have that discipline to where you know where not to engage and when to engage, which is important. So the model is rather quite simple. In terms of days of engagement, I'm going to talk about that first before I even get to the model. You have your Monday through Friday, of course. Ideally, I'd recommend simply trading mainly on from Tuesday to Friday. Of course, you might have days where that Monday setup is clean or whichever, but it's best to be in the most favorable conditions to be trading. And ideally, Tuesday to Friday is going to be your best bet. And you're just looking for, 1 to 2 trades per week. And it's really important to also have goals of what you're looking for. You already made let's say you made 6% for the week. That was your goal. You're done. You close your charts and go do something else, because it's knowing when to stop is going to really help you in your success and your development as a trader. But mainly the silver bullet model is going to be from that 10 to 11 a.m. session. We also have the 2 to 3 p.m. session. Ideally, this model is specifically for that morning session. If you didn't get anything in that morning session, look for something in the afternoon, but it's still based on the rules we have stated above. So it's really important you check that out. And I'll also be implementing the final hour macro as well, just in case. And I'm also going to be making a video for the Asian session. So for those of you who cannot trade during the morning, from 8:30 to 9:30, it's like I call that like the ICT Asian session silver bullet. And I'm going to be making a video explaining on how you can utilize the same steps also in Asia. So for those of you who trade JPY USD, AUD USD, NZD USD, and even any other exotic pairs, things like that nature, it's also going to be the same thing. Alrighty, so here I'm on the 15-minute chart. We're on NASDAQ. You can use any asset class, of course. This works really with any asset class, but ideally, you'd want to be utilizing this on really the types of hours in which they're going to be operating. So, for example, with ICT, it's New York-based AM and PM session. So you want to look at Russell, S&P 500, those type of asset classes. But I'm specifically going to use NASDAQ for this example overall. And the reason why I'm on the 15-minute is to give you guys a overview of the first two rules, which are going to be the most important. And many people might disagree with me. They might click off the video because of this. But again, it's like I said before, is that put yourself in the most probable situations where you're going to have the most success you can. Because if you force it or you're putting yourself in riskier trades, it doesn't make sense. So that's why I have, especially the first one is the most important one. And if you guys see the highlighted areas, this is simply the 10 to 11 a.m. silver bullet. Then this is the 2 to 3 p.m. and then the final hour macro. And this is the midnight opening price drawn across on all days. If you guys want this indicator, it's going to be called ICT Everything by Cold Bruges. And you can find that by going to your indicators and searching it up there. So breaking it down, like I said before, the number one first thing is price above or below midnight open? It is going to be the most important rule in this case. You cannot buy above midnight open. That's the rule. Like I said before, many of you might not like that. You might not agree with that. But again, if any of you are struggling or trying to find consistency, you'll realize that by placing yourself, like I said, in scenarios where you're most probable, you will have more success, but you don't realize it yet. Have the discipline to only buy below midnight open. Now, vice versa, if you want to be a seller, you want to be selling above midnight open only. That's the rule for that specifically. But of course, this model isn't only based on that midnight open. You have to still frame your idea on the daily chart and the weekly chart. But don't clutter your chart so much, but only focus on the current day. So for example, if it's Friday and you have this day, for example, you have this new day opening gap, you have that right there, you draw that out, and you know that that's a possible area of interaction for price. You also have this new day opening gap right there. Only focus, the daily should really be mainly as an overall framework to gauge as to what levels is price going to be interacting with overall. But the heavy grunt work is going to be done on those lower time frames, which is primarily, as we talked about, you're going to be using mostly the 1 hour, 15-minute, and 1 minute, sometimes even 5 minute. But going back to what I was speaking about, that midnight open, like I said, buy below midnight open, sell above midnight open. And I'll show you, you can see where those days are most probable. Look at here. During the ICT Silver Bullet AM session, what is price doing? It's above that midnight opening, indicating price is in a premium, and we sell back below it. Same thing happened on Thursday of this week. We're above midnight open, and we extremely sell off below the midnight open again. Let's keep it going. Here we go again. Here's Wednesday. Price trades up, trades back down. It's below midnight open. What does smart money do? They buy below midnight open. And here's another scenario. During the silver bullet again, we trade up, price is in a premium, it's above that midnight open, and we sell off. So again, you want to buy this, that's fine. You can, because you're below midnight open. That's okay. You want to sell this, that's fine. You're above midnight open. But if you want to buy this up here, you cannot. Because as I states in the model, you can only be buying if it's below that midnight open. There's also going to be other conditions, but I'm trying to give you guys a framework to work in so you can put yourself in the best scenarios as possible. For example, here we go again. This is Monday. What did I say about Monday? Of course, you look at that. It's beautiful price, it went up and all this. But look how choppy that was. I bet you it wasn't as clean as you guys think it was to get in there. But of course, you can absolutely do it. I'm not going to hold you against that, but it's like I said before, Mondays aren't usually going to give you such clean price action like this. So why not wait till Tuesday? Let everybody try to, go in and be impatient and make your money Tuesday. Be patient. Look how clean that setup was. You didn't have to go through all this right here. And then here we go. This is Friday of last week. What happens here? Price trades lower in a deep discount. What happens? We trade back above to that midnight open again during the ICT Silver Bullet model. And here we go again. This is going to be Thursday. In this case, see, so that, like I said, you need to be able to frame not only what's happening in the news. For if you go to Forex Factory, make sure you know what's happening for news, any high mid-impact news. And number two, frame it on the daily. You still need that daily to understand what is going on as well. It's not the only thing you're going to be using. You can't just use the midnight open. And number three, know when to just stop and skip the day. For example, here, of course, they bought below midnight open and then they got above it. But what are you going to do? Chase this and try to buy it? No, the only thing you were looking for this day was possibly seeing some kind of shorts here, but there was no setups. So that's fine. You skip that day. Here comes Wednesday. Wednesday was a little bit mixed, but it still provided the same kind of style that we were looking for. Price sort of chops around that midnight open, trades lower, discount, and we buy and we get above that midnight open. So the idea still stands overall. Like I said again, this is a similar example as to what we had Thursday for this Tuesday. Price buys below midnight open here, we sell off, getting back into that discount, and then we keep going above. That's fine. Skip the day, be disciplined, and know what you're looking for. That's it. You don't get that setup, just skip it. And then what happens here? So this is Monday. What happens here? We go below, we're below that midnight open, and then we trade back above it for the ICT Silver Bullet. So there's many scenarios while utilizing this midnight open in addition with the ICT Silver Bullet, but you have to go back test this and really understand where you're going to be most favorable in those situations. Alrighty, so starting some examples here on the 1 minute. Like I said, you're going to still utilize that daily for marking any kind of important new day and new week opening gaps, as well as any kind of draws, but that'll be up to you to signify where you want. I'm just simply going to break it down to where you can understand it on a 1 minute time frame for your entries and trade management, but also in the bigger time frames where you'll be able to understand how and where price is drawing to overall in the day. So it's by combining both of those so that way you're going to be the most in the probable situation compared to, let's say, only using the midnight open. So keep that in mind. So for example, here we have Monday. This is the 12th, and we see price trades lower. So ideally already, what are we thinking, right off the bat? In addition, by utilizing daily levels, let's say there was probably some kind of new day opening gap down here or something. But right off the bat, what do you see? we see a draw. Look at these equal highs right here. There's a draw right here. These are too smooth. Okay, so you have that. Number two, we're below midnight open. That's always, remember, that's the first step if we want to be a buyer. And number three is really important. This is stating, has price displaced and disrespected contrary side PD arrays? Yes, it has. So if we zoom in here, as you can see, price does a manipulation leg. Like I said before, that's what you like to see. You want to see price take liquidity in the opposite direction that you're looking at, because again, this shows smart money is accumulating. It's willing to take it even further. That's going to provide you better support and better confirmation towards the bias you're looking for. So you want to see moves like this. We manipulate lower. Remember, this is a displacement leg. If we drag this out here, notice price doesn't just stop and then come back or bounce here and come back. It completely goes below. So that's a displacement leg. A manipulation leg is this. We come down and we support it and we go back up, reversing immediately. And then what do I mean by disrespecting PD arrays and displacing? Look at this displacement all the way up here. Look at how price is completely, it's like a train. Think about it like a train example. All this upward movement, you see blasting through what? Look at this right here. Look at our first bearish PD array. People were trying to go short up in here. What do? We blast through it and we break it. What's another bearish PD array? This right here. This is a bearish order block. Boom, blast right through it as well. So already we're seeing prices willing to seek higher prices. That's our first confirmation. Where can you possibly go long? Now, for many like veteran traders, you might not want to trade with getting in with a market structure shift. For example, let's say here, you were looking for this fair value gap fill. You can get in there, and some other people also treat wicks as gaps. If you draw this out, look at consequent encroachment of it. That's also possible as well. But if you want to be safe, wait for price to respect that and give you that confirmation. Because as I said before, has it maintained a structure and is it respecting your favorite side? So as we can see here, it respects this fair value gap. If you draw it out, it respects the fair value gap in addition, and then we go higher. So I also mentioned breakers. Also, you can also utilize that as entry points as well. If we put the last up close candle, we draw that out, we see price closes above and respects that as well. That could also be a possible entry. But like I said, just be patient. Let's say you're waiting for a little bit more confirmation, some kind of pullback or something. That's fine. Price trades up, leave. Look at these two breakaway gaps. We leave breakaway gaps, and you're watching. The rule states you have to buy below midnight open. What happens here? We trade back into this fair value gap entry here. So what can you do here? You're going to go long, and simply you put your stop loss right below you could either put it below consequent encroachment of here for maybe possibly like a 1-to-1, or if you want to be a little bit more aggressive, and if you're seeing price really bullish, and you could possibly put it just below the small fair value gap right here. So if I zoom in, it's like a small little fair value gap. You could put it just below it. That's fine. And where are you targeting? Again, that main draw that we had there going up, and that's a perfect for practically a classic 3-to-1. You're getting, you're risking 1 for 3. That's perfect. And as we can see, price actually continues up higher. Of course, you can also scale this out and use standard deviations. If you don't see any levels up here on the daily chart or anything like that, you can easily put up a standard deviation Fibonacci tool, and that's fine. But we can keep seeing prices respecting bullish PD arrays. That's what you like to see. It's once price fails to do that, then you have your problem. But we're seeing displacements, and we're seeing price respecting these bullish PD arrays. That's the most important thing. But it all originated, the main idea originated with price being below that minute opening price and really taking liquidity in your favor. Remember, if price was going up already outside of this, I wouldn't want to go long. Because why? Price is taking liquidity not in my favor. That's really, really important. And something else to note are those macros. As you can see here, we entered at the close of the macro. So the macro closed right here at 10:10, which could be implying a little bit of a better scenario for us, but ideally you want to be careful with that as well. And then the next macro starts at 10:50, and we begin to consolidate, and then finally selling off. And what did I say before? Look how price trades up into the premiums and a deep premium above that minute open, and then we sell off. So again, place yourself in a highly probable situation by trying to buy below minute open and sell above minute open. this is what I was talking about, the PM and the final hour macro. You're not going to get as clean price action. Understandably, it is Monday. Like I said before, Mondays use them as tape reading sessions. You're not going to always get clean price action like this, so just use them as tape reading sessions. And really, like I said, ideally you want to be skipping these two. Of course, you can possibly engage with them. Let's say today's Tuesday. If you weren't able to get anything in the morning session, hop in the PM session, see what you can get. But it's not going to be as clean as you got on the morning session most times. But it doesn't mean that you can't trade them, of course. Okay, so now we have an interesting example. Prices above midnight open. Let's say maybe you had something on the daily. There was some level here that you were looking at. You wanted to see price respect some sort of PD array here on that bigger time frame, seeking liquidity here. And let's say, okay, you were like, all right, we got a little trend line here. Retail is trying to buy up this trend line. You want to see price go lower. Now, before you can think of even going lower, like I said before, the first thing is price below or above midnight open? We're above midnight open. Because why? Midnight open is all the way down here. It's really, really far. Let me remove this one. It's really, really far from where price is currently during that ICT silver bullet model session. So you have that. So you follow that checklist. The second thing is, has price taken liquidity in your favor? Yes. You're taking buy stops, buy stops, buy stops. Perfect. Now, number 3 is also very crucial. This is your confirmation. Once you pass the first two, step 3 and 4 is really adding confirmation, trade entry, and management. That's really what they are. So number 1, as price disrespected the bullish PD arrays, one could say maybe it has, just because from here, for example, we have a bullish PD array here, and then we see price trade through it, but then it trades back up, and it's sort of chopping around, and we're not seeing any kind of price action. Something else I also recommend you guys put down on your charts is also have the 10 a.m. open. By having that 10 a.m. open, you utilize that and you signify the ICT power of 3. It's really, really, really important that you guys also utilize that power of 3, as it will give you a bigger edge on price as well. So you see price is chopping around. It doesn't know where to go. Now, this is an interesting situation. See, many traders might have got locked in and try to go short here. Now, why wouldn't you go short here? It was like I said before. Know the difference between a displacement leg and a manipulation leg. This is not a displacement leg. Why? Because price trades down to it. Number 1, we don't close below it. And number 2, we wick right back up and we trade back above that 10 a.m. open. You never want to see that. If price was actually bearish, you'd want to see this kind of candle, these deeper kind of candles like this, and you want to see price, trade below it, get some distance away from that 10 a.m. open. You don't want to see it go down and then come back. This is all consolidation, it's chop. So what do? Skip it. Simply skip it. Get off your charts or back test, tape read, whatever you want to do. But really, like I said before, this allows you to step 3 and 4 is the confirmation bias. That's going to allow you to say, okay, I'm not getting what I want. It's already that 10:30 time. Remember we talked about half hour. It's already that 10:30 time, and we're not getting the setup that we need. What do you need to do? Just hop off the charts, go study, do something else, because the more time you spend on the charts, it's not going to be in your favor. As you can see, the PM session also wasn't as clean. And again, it's like I said before, ideally, those if the AM session worked, ideally the PM session should work, but it's not going to always work all the time. And once again, we do have the same problem. Like I said before, this is not a displacement leg, it's a manipulation leg. And if you draw your fair value gap, as you can see, price trades up into it. People are trying to go short here. No, why would you go short? You're looking for these heavy volume candles that train, for example, like this. Why is this a displacement leg? And why is this one not? Look at the difference. Look at the difference. It's rather simple. Why did this fair value gap work, chasing price lower, and why did this one not work here? Look at the difference. We close below it, and look at the volume associated with that. We break through this low with force, respect the fair value gap, and we head lower, taking sell-side liquidity right here. Here, we simply go down, and we come back up right away. We don't close below it and trade down further. That's so important that many people don't realize that it's not just fair value gap entry to get in. It's about waiting and understanding the candlestick anatomy in relation to what you're trading. here we have Wednesday, August 14th. This is an absolutely beautiful day if you are trading the ICT Silver Bullet model. And let's run through its simple steps. What do we always do? Well, first, there's probably some daily level. Like I said before, you always want to go on your daily level, look for something that's going to allow you to really give price the proper bias and guidance that it needs for you to go and engage in the day. So already we have some buy side up here. As you can see, these are really clean highs. And going into the day, what do we see? Price is taking liquidity in your favor. Remember, it's going further below. It's taking liquidity in your favor. We're below midnight open. So the first two things are already clear. So you want to be a buyer. We have clean highs right here. And we also have slightly a trend line as well that formed. If you draw out this trend line here, what is retail thinking right now? They're trying to sell all this. But let's keep our charts clean so we can really understand price action. So the first two boxes are checked. What are you looking for now? Has price displaced and respected contrary side PD arrays? Yes, it has. If we look here, it did take till price, reaching 1030 to finally start moving up. It's okay, if you don't see anything starting off, even after starting with the macro close at 1010, wait. ICT always says wait for the first hour of trading and you'll start to see better setups from there. So 1030 is right here. You can see if I put my vertical line, look at how the setup starts from there. So what happens here? Price trades down. This is a manipulation leg, and I'm going to explain as to why it's a manipulation leg. So the first thing we have to realize is look at this bearish PD array right here. Price wicks through it completely, damaging anyone trying to continue to sell there. Where's another bearish PD array right here? What does price do? Completely break and trade through it. And what happens on this last bearish PD array? Same thing again. We're wicking through it. It's slightly respecting it, but look at the damage. We continue to keep wicking out of it, showing damage. That's not what you want to see if you're bearish. We blew through 3 PD arrays, and this is a manipulation. Like, why did I just say that again? Number one, you drop down and look at the force that you come back up. That's not what you want to see. You want to see a weaker move back up and then trade lower. But this is not what you want to see if you're bearish. So we displace higher. Look at that displacement. In addition, look at how we're disrespecting bearish PD arrays. Perfect. Now, do we maintain structure and respect favored side PD arrays? If we draw this fair value gap right here, this massive VISI, what happens here? Price trades up and breaks through. Now, in this case, you do have a breaker because you have a low, high, lower low, and then we make the high all the way up here. Your last up close candle is your bullish breaker. What happens right here? Price trades right into it, consequent encroachment, and we trade up. Now, let's say, for example, you didn't have a chance to get in. That's totally fine. If you look at this fair value gap here, you already closed above, you're displacing, and you're respecting the bullish PD arrays and structure. You're violating all these bearish PD arrays, so you know you're going to be on side. In addition, you're below midnight open, looking for what? That main draw we have up here, which is fine. So if you zoom in, you draw out your fair value gap here. What you can do, you can enter there, stop loss of below consequent encroachment of this order block, and you can change it as however you want. You can even put it below consequent encroachment of this breakaway gap. And as we can see, price trades up higher, creating more fair value gaps and respecting price even higher. Like I said, many people would have got faked here trying to get out as well. And if you draw it out, what did I say before? When price doesn't close below with volume like this and it rejects back up, that's a manipulation leg. All it's doing, and remember, it went up first. This is a Judas swing. It Judas swinged. It's just trying to get liquidity once more to go up higher. But going back to this is a macro as well. If you enter here on this one from that 1050 to 1110 macro, you easily got right within the macro and you trade that price all the way up to that main target that you had up here. And what could you do? In this case, you would just simply trail your stop losses below each low until you got to final terminus overall. So really, once you finally become disciplined and follow this model step by step and keep everything in order as to where you know price is drawing towards, like I was talking about earlier, knowing if you're below that midnight open, are you disrespecting PD arrays contrary to your side? That's absolutely crucial. Now, in addition, you can also add DXY to your trading framework. By utilizing divergence and things like that is going to give you an even extra layer of confidence in your trade. So let's say, for example, we were to go to DXY for August the 14th, and we're going to see what happened on that date to see if we had a possible divergence in our favor, because that's what we want to see. So in this case, this is going to be, let's see where we are. This is August 14th. Now, keep in mind we are below midnight open on DXY, which is also something else to keep in mind. Ideally, you want to see DXY above midnight open. That's going to give you even higher probability. But it's fine if it's not. This is going to be okay regardless. And as we can see here, price is going to be below midnight open, but however, we still trade lower and seeking this equal lows here. So you can easily use that as a divergence. It won't really be that big of a problem overall. So I appreciate you guys watching the video. That was the model. Feel free to comment down below. And like I said before, back test, study this, journal, all these different things are going to help you really grow as a trader and be disciplined. But you have to follow the model one by one. It's really what's going to allow you to grow. So I appreciate again, guys, your time. Thanks for watching, and I'll see you guys in the next one.